Hello, everybody. It's Sunday. It's a day of rest. Only kidding. Not for me, anyway. But thank you all for joining and spending time with me. This is a banger of a show. The questions cover so many bases, all interrelated, but a whole bunch of trade-offs, a whole bunch of pair trading, a whole bunch of hedging capabilities, a whole bunch of what I call spreading traps and waiting for them to hit. We'll talk about one of those that actually did so far this year. Despite being a bumpy year, it's been very good for certain assets, but not so good for others. But the future is bright, no doubt about that. So let's jump in. And a big thank you as well to the moderators in the chat and everybody out here. In fact, let me pop open the chat so I can see you all. And by the way, it's really cute. Every time somebody hits a like, I see a little love heart fly up across the screen. So it makes me feel good. So appreciate that as well, everybody. Let's go. As usual, this will be a big one, but tons of alpha. And that's what it's about. But none of this is ever financial advice. It's just edutainment. And all the questions come from Patreon. So a huge shout out as well to everybody in Patreon. The first one is a banger of a question. And it's tricky. And it's hard to kind of answer this one, but it made me think for days and days and days. And I'm a big fan of Jeff Booth, but let's jump into this one from David W. What do you think of Jeff Booth's proposition that Solana's black hole ascendancy is merely transitory, as Bitcoin is the ultimate black hole? And in his article, Finding Signal in the Noisy World, by the way, I use that term all the time, finding signal in the noise. That's a big part of what our TA is about. But Booth says that, in his opinion, each of the competing blockchains and altcoins are predictable, but each will fail in the end due to their inferior security and or decentralization. And he states Bitcoin possesses superior security and decentralization at level 1, with scalability, speed, and inevitability developing in its second or third layers, and thereby consigning Solana to a footnote in blockchain history. So again, I put a lot of thought into this one, and a shout out to Jeff Booth. You are amazing. You've been on the show 3 times and huge fan of your work. But let's dig into how I invest. I look at data. I look at relative valuations. I look at a whole bunch of quant, and then I use TA to time my entries. Let's dig into the first part. Okay. This is going to be a bit of an eye chart, but I'll go through it real quick and you'll get the message pretty fast. But if you look at what I call Bitcoin versus Solana, they have very different purposes. And yes, you can see the Nakamoto coefficient crushes Solana. Solana's at 21 right now, and Bitcoin's at 7,300. So yes, definitely more decentralized. But everything else, with the exception of daily fees, because Bitcoin's expensive, literally Solana smokes it. But the rate at which it smokes it is also pretty impressive. So if you look at the TPS of 7 on Bitcoin versus Solana, it's 5,000, 7,000, depending on the day. It's very, very different. There's also a lot more users, and the users do a lot more transactions per day than Bitcoin, which is 0.7 transactions per user. And also, if you look at the developers, Solana has more developers than Bitcoin, which is kind of stunning. So from this perspective, why do both? And I'll get back to why do both. Also, if we look here, it's different scale in every single way as well. If you look at the market cap, Bitcoin market cap is 20 times higher than Solana. So one of the things I like to do is buy things cheap. There was a time not too long ago when the market cap of Ethereum was 25 times higher than Solana. 25 times higher. And Solana had more daily active users. So in my little brain, that made no sense. I couldn't reckon with that at all. Anyway, if you look at market cap per transaction, Bitcoin is 108,000% higher. And overall, the numbers are staggering all across the board. I don't need to call them all out. DEX volume is, again, 100,000 higher. TVL, 500% higher. Etc., etc. You get the idea. Although Bitcoin does have more Twitter followers, 6.3 million versus 2.4 million on Solana. So that's just from the metrics perspective. But let's go and peel back another layer. And this is layer 2. So first of all, 7 transactions per second is not going to cut it unless you want to be a store of value when you grow up. And that's what Bitcoin is. And by the way, my 2 biggest crypto positions are Bitcoin and Solana. So there's no... I'm not anti either, but I also like to hedge my bets. Like I got into Solana because I was looking for an ETH hedge. Now ETH is pretty much all gone from my portfolio. I have a little bit in case it does go to the moon, but we'll see. But now it's like different assets, and that's kind of how I invest. Now let's talk about layer 2s. So as we've seen with Ethereum, there is a huge amount of complexity and horrendous user experience that comes along with layer 2s. Layer 2 solutions often introduce horrible user experience, additional steps for depositing, withdrawing, paying fees. It can be a barrier for non-technical users. Also, there can be security concerns. The more layers you bolt on, the more risk attack surfaces you have, which is not good. And also, interoperability can be challenged with layer 2 networks when it comes to moving across different chains, and everything needs to be interoperable in the future. Also, despite the fact that Bitcoin may be decentralized, layer 2s may be heavily centralized, which is another risk and against the ethos of blockchain technology. Also, limited functionality. Certain layer 2 risks may not support all of the type of applications that are needed in today's world as well. And it's the age-old story I've been talking about since day one. What is better? Modular versus monolithic. And again, going back to Occam's razor, as Elon says, first principle, simplicity. Do you want many building blocks or one that does it all? And that's the kind of the difference between monolithic versus modular. I think modular is too crazy, too complex. Now, shout out to Dr. Choo, who actually posted this, and it was a way of getting an airdrop. And I don't have time for this stuff. I have a MetaMask from years ago I've never opened, but here he's telling the community how to get zero land airdrop. Just sign in using verify your EVM wallet, and then use a MetaMask, and then go to Rainbow, etc. It's supported, and then there's no risk, and then you need a ZK Zinc network, and then I start to read this, and I go, ain't nobody got time for this. I wish I could share that meme live, but it's just bloody complicated. And that's why adoption happens with things that are less complicated. Yes, I can do this. Do I want to? No, I don't have the time. I want fast, simple, instant finality. And speaking of instant finality, there is a key metric that you'll only see on this channel because we look at it, and that is what we call the most important metric. That's TPS divided by finality. And Sol is 300,000 times better than Bitcoin in this regard. For the world to work, people need instant gratification. And when I say instant, I'm talking near to the speed of light, literally a second or maybe 2 seconds or a sub-second. And the speed has to be really fast. You can't wait 10 minutes or an hour for finality. That doesn't work in today's work. But again, Bitcoin has a different value prop. It's a store of value. Will the layer 2s help it? Maybe. We've watched Lightning for years and years. It has a bunch of problems. And final note as well, regarding like what Jeff Booth said is very, very correct. Solana could be a footnote in history. But also bear this in mind. And this is what I always think about. And I always say, keep your tap dancing shoes on, because the pace of change in our world is completely unprecedented. It is leaving us very, very uncertain about what the future holds in the next 10 years, in the next 5 years, or even the next 2 years. And we are living in an era of exponential growth as well, especially in the field of artificial intelligence, which is evolving at a rate of 1,600 times faster every 2 or 3 years than what it currently is today, which is already better than humans. Now, given this rapid advancement, it's conceivable that cryptocurrencies like Bitcoin and Solana might not even exist at the end of this decade, okay? This is so important. Can something with 7 TPS survive? No, it will need layer 2s. What are they? We don't know. If you're not running at 1 million TPS fast, you're not going to make it, because that's what's required to onboard a couple of billion users in the crypto world. So that's the final note, everybody. We don't know where this is going, but in the meantime, these are exponential times. And a shout out to Jeff Booth as well, because he uses this to explain exponentiality. And that is, if you fold a piece of paper 42 times, it reaches the moon, which is 450,000 kilometers away. I think that's about 300,000 miles. It's very far. So we don't know where the future is going. The point is, for adoption to happen, we need speed, we need finality, and that is my thesis. And I hold both Bitcoin and Solana. Will Solana die? Could it? Yes. Could Bitcoin die? Yes. Could AI develop a better blockchain real fast out of the box in a year's time, 2 years' time? Yes. Will it be adopted? We'll see. It depends on the community, depends on the features, functionality, and the amount that's built on it, and that's it. So from that perspective, we'll see what happens. David, thank you for the question. Sorry for being long-winded about that one, but it was a tough one. All right, next question from Big Wong 8. Should I swap ENPH long-dated calls for Tesla calls? IADSS recently flashed a buy favoring Tesla on the Tesla ENPH 4-hour pair chart. I currently hold no Tesla calls. Well, let's break this down. Let's analyze this, and I'll try reverse engineer what you are seeing. First of all, this is the Tesla ENPH chart. And again, I always get questions regarding pairs, and people get confused as to how to read them, but it's actually really simple. So I'm going to take a second to explain that. This is Tesla divided by ENPH, and on the right-hand side, you'll see a price of about 1.8. That means there's about 1.8 shares of Tesla for every ENPH share. Now, as the number on the right-hand side goes up, it generally means the first stock, in this case Tesla, is outperforming the second stock. You can do this with crypto as well. You could do Sol over ETH, etc. You get the idea. And I always pick the asset you're looking for first. That's what I do, like Tesla or Sol, and then have the other one on the other side. So this indicates that the value of the numerator, Tesla, is increasing relative to the denominator, ENPH, either because Tesla's stock is rising more rapidly or ENPH stock is falling more rapidly, or a combination of both. You don't know exactly what's going to happen. And conversely, number goes down means the first stock is underperforming the second stock. Now, what's uncanny about this chart on the 4-hour, on the confluence model, is look at where the buy signals occurred. They occurred just under the 200-day moving average. I don't know if this is a coincidence or whatever, but it's pretty insane. So yes, using this model, it definitely looks like a buy. Let's switch gears and change to the ATR model, see what that says. The ATR confirms, again, a buy at 1.77. That is 1.77 ENPH shares per Tesla. And you can see how beat down it is. And I do reckon it'll go back to 2.6 at some stage. But there's more. Let's look at mean reversion, which is very critical too. This is Tesla ENPH on the mean reversion, and it's deeply, deeply oversold. That little green dot there highlights that. It's 1.6 standard deviations away from the mean, and therefore, yep, that's actually a buy signal as well. So when you put all of these together, you're dead right. If you want to be 80 to 90% sure of which asset is going to outperform over the next 3 to 6 months, it's probably going to be Tesla against ENPH. Now, there is a wild card here as well that I do have to note, and I own both of these as well, but I have more Tesla than I do ENPH as well. First of all the technicals, IADSS, trend, confluence, mean reversion, ATR, all signal yes, so you're bang on there. There is that wrinkle that both are quasi-energy plays, and they will both greatly benefit from lower interest rates. And ENPH is further from the all-time high than Tesla. And remember, everybody needs some Tesla, so I don't want to give you financial advice, but if I was in your shoes, I definitely think about moving some to Tesla as well. So I hope that helps, and I hope that wasn't too technical. Next is degen. FluxB has its reflection mechanism that it rewards 1,000 plus token holders by distributing a percentage of its trading fees. But doesn't this mechanism create a high inflation rate of the token? And how would this impact the price in the long run? It's wonderful that you're thinking in terms of inflation and these dimensions, so kudos to you. Let's break it down. And I did this before, but I'll say it again. The tokenomics of FluxBeam are very, very good. I like them a lot. It's part of this token 2022 capability. Now, it does have a total supply of 500 million tokens. 80% was released during the public sale, and now about 86% is circulating, which means, therefore, there's only 14% more potential inflation. That's not a lot. And I know where you're coming from regarding, well, if they're paying users fees, where does that come from? Remember, fees are paid. It doesn't increase the amount of supply. at all. So if you look here, the reflections, and this is where it kind of comes down to 40% of all fees collected by FluxBot will be used to buy back FluxB. But there's more. In addition, when you look at FluxB reflections, it has a couple of different components. First of all, every trade takes a 3% tax. And FluxB is the native token of FluxBot. People sometimes get confused about that. And the tax is distributed as follows. Holders get reflections, which is 50% of this. Okay. Now, liquidity pool gets 25%. The team and operations gets 25%. And then the holders get service fees of 40%. So you technically, when you hold, you get 2 drops. And this is one of the things that I really liked about this. And let's break down an example of, this is a real live example, screenshotted an hour ago. So imagine you have 500,000 base tokens. Your daily rewards are 255 tokens. And I wanted to calculate, okay, if I get 255 per position per day, what is that in terms of growth over time? So technically you get a daily growth rate of 1.0051, and the annual growth rate compounding over a year is 20.45%. So that's not bad. Not only will DEXs go up in value as the crypto market cap goes and the black hole sucks everything in, and that's kind of my thesis, but also I did make a trade alert on this one on Patreon on the 14th of January, and I bought Flux under 2 cents, and whatever we have, less than 2 weeks later, it's up over 400%. So this is the reason for the Sol Alt portfolio. Super risky, but some of them will blow up in a good way, up. Some will blow up and maybe go to zero. And that's the risk you take. So you put, say, 10,000 in here, it becomes $50,000 in 2 weeks. And that's kind of the play here. But that doesn't even include the rewards. So if we look at the ATR model as well, you can see FluxB here. It has been my best Sol Alt year to date. It's up over 400%. And that doesn't even include the APY. So it's done really well. And by the way, for those who use ATR out there, this asset does really well on deviation, not trend. But the trend up keeps you in the trade. So you'll see here in the middle, you see the red sell flags? The blue stays blue. That means you don't sell. You wait till the trend turns, then you sell. And then you buy back in again. It's real simple. And speaking of this, I thought there was a post from somebody. Yeah. This is, let me see. It's in the wrong position, but here it is. This is from Sir Manus, and thank you to the team that supports me. They pulled this comment live, literally 5 minutes before I went live, and made a slide from it. So, Sir Manus, I've been trading in and out of Flux using IADSS, and it's been phenomenal. And Sir Manus shared this. So, it is awesome. And he's using IADSS. The chart I was sharing with you there is ATR. So, there's a number of different ways you can so-called make the tools work. So thank you so much as well for making that comment. All right, next question. And again, just to revisit to Sol Alts, super risky, super small caps. I pick the ones that do a lot of due diligence. I pick the ones that have the most upside compared to an analog of previous cycles. And I'll add the FluxB video up here. I think it was Sol Alt number 5 on the list of 6 so far. 2 more coming, perhaps, if they fall into my traps. All right. Let's go to the next question. This is from Alpachi. How do you limit downside when trading with DEXs? They're great for degen plays, but without the option of using conditional orders like stop losses, I find it hard to justify heavy bags. Again, that's the risk you got to take, the risk reward. I mean, I was buying something for 2 cents. It's now a lot higher. So, and there's a couple of things you can do. First of all, you're dead right. Rule number 1, and everybody should write this down. Do not place heavy bags on hot wallets. So if you're doing this at Phantom, etc., be careful. And if you have to, spread it around extensively, okay? Have many of them, not just one. And rule number 2, yes, there are no stop losses on many DEXs, but what you can do is you can set trading view alerts at key layers. So I actually do this using the layer in, layer out model, and I plug an alert at the price. So for example, this is Bitcoin. If you want to see a Bitcoin chart, you can see Bitcoin has a very strong support level, level 7, at 39,135. And you can see we actually reached that perfectly not too long ago. But what you could do here, the way I like to do is you set a support level or a alert level right below that. So like 38,948, just under the 39K level. You don't want to be too close to the support level because there can be little wicks that'll wick you out. That's where you'd set your alert, and that's where you check your thesis, and that's where you determine if you buy or sell. Okay, because you have to look at the wick, and you have to go to sometimes the 20-second, 30-second chart to find exactly what's going on. In addition, what you can also do, another tool, you can hedge using Perps. For example, if you want to hold on to your position, if you want to hedge something like Ethereum with Sol, you can do that on Jupiter as well. So for example, here you can put in, imagine you have 32 ETH you want to protect, or 31 ETH. You can calculate exactly how many Sol you need to put down and what level of leverage you need to put in position to be able to protect your downside. So if you saw, for example, ETH doing that spike like it did to 2,700 a few days ago, and you said, oh, all the charts say it's very, very toppy. I don't want to sell my ETH, but I do want to protect my downside. Take a bit of your Sol and you buy the insurance. And then once especially if it's a really, really big blow off top with a ton of mean reversion to the upside, that's what you do. And I will be doing a perp special class for Patreon as well, because people have been hounding me. The reason I haven't done it so far is playing with perps and leverage is extremely dangerous. Extremely dangerous. So you got to make sure you have the right risk management in place. So thank you for that question. Next one is from Steve G. Celestia TIA is making a lot of noise as it's a new type of modular blockchain. As it is being touted by some as disruptive, is this another opportunity to consider? I have looked long and hard at TIA ever since, I can't remember his name, Chris was talking about it, and he's an investor in it, and he talks about it, and he also talks about the fact that he thinks Bitcoin will go to 25,000. But I think, allegedly, a separate issue. But let's look at Celestia versus Solana first of all. It is an interesting project, but they are very different in their approaches to blockchain technology. Solana focuses much more on high transaction throughput and speed, and Celestia really looks to provide a scalable data availability layer for blockchains. Very, very different use case. Now, Ethereum, which I'll talk about next, is different. But when I compare these two to each other, again, Sol focuses on speed, TIA focuses on DA. Very critical, okay? So that whole DA world you're going to hear a lot more of as we go forward. It doesn't mean decentralized application either, by the way. But watch for that very carefully. Now, when we look at Ethereum versus Celestia, that's a different kettle of fish. Then I do believe there could be a lot of threats coming Ethereum's way. So if you look at this, the Celestia potential is a threat to Ethereum because it has that ability to provide a much more efficient DA, which is data availability layer for Ethereum's layer 2 scaling solutions. And by doing so, it could potentially reduce demand for Ethereum native layer 1 scaling solutions, such as sharding when it comes down the line. However, Celestia's success in this regard is not guaranteed. Ethereum is still the 800-pound gorilla, and it does include its own data availability solutions, such as sharding and data sharding that'll be coming soon. So from that perspective, we don't know where it's going to go. It's not a threat to sell. But the question is, that I get all the time, is why didn't I buy it? I saw it cheap. Now it's up, I think, it's up about 25% year to date. But the tokenomics is weak compared to its peer group. I use the crypto compendium like a Bible. If it's weak compared to its peer group, I will not touch it. Inflation is high, fully diluted market cap is high at $17.3 billion, and that's what keeps me out. There's not the upside that I can get in other assets. Could it be 40 billion? Yeah, it could. But that's only a 2x, and that doesn't get me excited. So from that perspective, I did not touch it because the compendium score is not good, especially when you compare it to some of the new projects that are coming out as well. Very different. And it is a new project too, so that's what kept me out. So please do your own research, but that's why I did not buy. Plus, I don't want to hold too many assets as well. Next in the box. This one is interesting. Oh, this is such a fun one. I saw an article saying BMW says goodbye to electric cars. It has solved the problem of hydrogen engines and begins a new era. Is this a risk to BEV and Tesla? So, first of all, this is in a magazine called La Grada Online, which is basically, they don't write good stuff. So you got to look at the source. Always check the source with everything in life. Everything you read, everything you hear, most of it is BS or it's biased in a big way. So let's look at high level of hydrogen fuel cells in cars and why I believe they are folly, which means nonsense. First of all, they're less efficient than batteries due to huge energy losses in production, in transportation, and in conversion. Also, the infrastructure, there is no decent refueling infrastructure as well, which is a huge challenge. Also, hydrogen production, storage, and transport costs far exceed those of electricity and gasoline and diesel and all that good stuff. Also, storage and safety is a huge danger because they require very high pressure tanks. And if anything happens to them, well, you can imagine what happens next. In fact, I'll show you what happens next in a minute. And also, what people think, oh, hydrogen's clean. No, it's not, because it's produced from fossil fuels, releasing tons of CO2 into the atmosphere. So it is not a cleaner solution. It's kind of like charging your EV with a diesel generator. That's basically the good way to think about it. It doesn't make sense. Also, you're sitting on a missile. I love this little image. See that thing in the middle? That's a missile. If anything hits that, pierces that, it's go bye-bye. You're dead. Very quickly dead. Now, they have very volatile cylinders. This is a 1H2 transportation truck, which transports cylinders, and the whole thing blew up and caused a lot of damage. There was another case of an explosion of something like this, and within, I think, 1,000 yards, 300 feet radius, 1,000 meter radius, 600 houses lost their windows because of one of these things popping off. This is a hydrogen bus, very popular in some places. Yep, they go on fire too. You wouldn't want that bus full of, heaven forbid, school children or something. It's just not dangerous. Fortunately, this was empty. And Mercedes-Benz, smart people, they don't get everything right, but they tried to develop a hydrogen car for years, and they threw in the towel because they said it's simply too costly. Too costly to develop or too costly from every perspective? The answer is the latter. Let's look at hydrogen fuel efficiency. Now, these are numbers out to 2050 from 2020. If you look at the electrification, direct electrification, which is what BEVs run on, they are currently in 2020 at 77% efficiency. They'll go to 81% efficiency. That means by the year 2050, only 19% of electricity will be lost in the grid before it's delivered from the point of source to the battery in the car. 19%. Now, when you compare that to hydrogen, it's currently at 33%, which means 67% is lost, and the maximum efficiency for hydrogen in the year 2050 will be 42%. Call it 60% lost deep into the future, and that is no good. That is simply not going to make the cake. And final thing, these are real statistics from a hydrogen vehicle. You can read the detail, hit pause. But if you compare this hydrogen vehicle to a 60 kilowatt Tesla Model 3 in California, which costs about $11 to tank for a range of 333 miles, you compare that to a hydrogen tank, it'll cost you $201 to fill it, and it'll cost you 50 cents a mile. So basically, the BEV is 0.036 cents per mile versus the 50 cents per mile on the hydrogen tank. So a battery electric vehicle is 14 times cheaper to run. Ignore all the folly. And by the way, our friends at Toyota are going down this rabbit hole too. And BMW, they're doing this, but they have not stopped investing in EVs. In fact, they see the General Motors and Fords and Stellantis falling away by the wayside, and they want to be second place. And BMW have done something very correct, and that is build from the ground up. So the fact that they're dabbling in hydrogen, I don't know, maybe some board member wants to do it for some reason, but it's not going to work. Simply is not going to work. Next is from Raymond LB. Can I use IA Arb Cloud to trade IBIT or FBTC versus MicroStrategy, or is it just pure form Bitcoin? So this is a huge issue. right now. And if you follow me on Twitter or on Patreon, you'll see my posts of the huge delays between the time that the ETFs sell shares, like IBIT, which is the BlackRock Bitcoin ETF, or FBTC, which is the Fidelity Bitcoin ETF. Massive delays. It takes them days to, they take in your cash, and then to fill their bags with Bitcoin for that cash, it takes days. And of course, the price fluctuates. In fact, since I started, let's just check the Bitcoin price. Wow. Bitcoin was 42,600 when I started. Now it's 43,000. Okay. That's $400 in, how long have I been live? I don't even know. 30 minutes. $400. Can you imagine? Imagine the fluctuations over a 2 or 3 or 4 day period. T+1, T+2. Plenty of opportunity to do some creative market making there. Anyway, not casting any aspersions, but Arb Cloud really, it will not work for these things because there's too much of a delay between price. The good thing about MicroStrategy, it's very volatile. And there's huge swings. And in real time, you can tell if MicroStrategy is undervalued related to Bitcoin, which it has been quite a lot so far this year, versus the other way where MicroStrategy is overvalued. And that's typically when I go short. And the Arb Cloud is specifically designed to identify that very specific arbitrage opportunity for Bitcoin and Bitcoin proxies, such as MicroStrategy. So if you have another asset, for example, say CleanSpark, and they have half of their market cap in Bitcoin, then you can use this as well, as a little pro tip. So keep that in mind. Just remember, ETFs do not work because they're so delayed, so slow. But other ones you can. Just make sure they have at least, say, 30 to 50% Bitcoin holdings, and then you can play with it all day long. Next is from Mitch R. Is it accurate that the quantity of Bitcoin is generated with each blockchain creation remains constant, but undergoes a halving during halving events? Yes. And assuming this is correct, would an increase in transaction volume due to greater protocol adoption lead to an earlier occurrence of the halving process? Brilliant question. I like the way you're thinking. So let's break it down. It's pretty simple. Simpler answer is no, but there is a twist. So Bitcoin halving does reduce the block reward by 50% every 210,000 blocks. That's kind of like the 4-year clock. But that results in approximately every 4 years, the initial reward is 50. So I like the 50 being the initial reward and the 50% is the halving. Also, transaction volume does not affect the timing of halving events. These are based on the number of blocks mined, not transaction volume. Also, the Bitcoin network adjusts mining difficulty about every 2 weeks or every 2016 blocks to maintain a constant block creation rate of about 10 minutes, ensuring halvings are not accelerated or increased due to volumes or mining activity. And that we just saw yesterday in yesterday's video, the biggest hash increase that I've ever seen is over 7.3%. And that happens every 2 weeks. So that's going to turn, it's going to be hard on a lot of miners that have very inefficient rigs. So from that perspective, it's a self-regulating mechanism and it's genius the way it works. It's genius in its simplicity. Always find the simple stuff. And next question is from Nicodemus Wu. I'm 39. I'm planning to stop working in 2030. I've got your retire on cocktail bag for 2032 3 times over. Wow. My Tesla bag is even 5 times bigger. Wow. Now I think I have enough Bitcoin and Tesla. Would you like to add some real estate, but don't want to own and manage property myself, thinking about getting some REIT stocks? What's your opinion on REIT stocks and which are good? Wow, amazing. So first of all, super impressed. You're so young and you are so well positioned for the future. I hope you like that little picture. Very impressed. And I mean that. It warms my heart to see young people building towards a plan and then blowing it away. Because that's exactly what you get the bag and then you try to get 1.5 times the bag and then 2 times the bag and you keep on building. And by the way, as well, I forgot to mention, when the last time I put those models together for Tesla, it didn't really incorporate the amount of potential from the bot. I had some in there, but nothing like the modeling I did with Seren Basher on Friday or with Herbert Ong back in late December. It's a game changer. So if you have those bags, and I know Tesla's very weak right now, it's because it's hated and nobody understands it. Yeah, I get that. But it will pop one day. That is a given. So let's talk about REITs for a second. REITs, they have very low potential returns. Historical results are horrible. I'll show you a chart in a minute of the number one REIT. And especially when you compare the returns to something like the S&P 500, it's a no-go area. Also, they are very sensitive to interest rates. Rising interest rates can cause borrowing costs for REITs, impacting their ability to acquire and manage properties, and also the amount of dividend distribution. Also, they're very subject to economic downturns. A decline in housing prices or occupancy rates can smash their performance. Also, they've got no diversification compared to the S&P 500. And there's tons of liquidity concerns. Sometimes publicly traded REITs have very low trading volumes compared to stocks, so you could have a tough time dumping and getting out. And the management fees. There is a huge cottage industry of people taking fees out of your REITs before you get your piece, and that's not good. Also, whatever you get, the dividend you get, there's tax implications depending on your tax situation. You can pay a truckload of tax on that, and there's no control. Unlike directly owning your rental properties, REITs do not offer any control over your property. And there's regulatory risk, market sentiment, etc. But let's look at a chart. This is a thing called Armor, the top residential REIT in the country. And this is down 95% over the last 13 years. Yes, they do pay 7% dividend, but you get taxed on that. Do you want to buy something for, say, $400 and now have it down at $19? No. You want assets to go up. Dividends be damned. Unless you need to live off the dividend, but then you got to pay tax, and that is just, you're better off buying assets that go up. And imagine you have 1,000 shares of Tesla, and then every 1 or 2 years you need to cut some dollars to live on. You sell a couple of shares, but then you keep the majority of your bag. You do not buy these things, these REITs. So I wouldn't touch one in a million years. Hope that helps. And congratulations again on what you've done. Super impressed. Warms my heart. Next is from Dacola Bear. If I were to come into some money as of March 1st, and these funds were available for 9 months, no interest payback, would you invest in Bitcoin or Solana to maximize the returns before paying the principal back? Number one rule of investing, everybody. You should know what it is if you watch this channel. Never, ever borrow to speculate. Never. You don't know what's going to happen in the market. World War III could happen tomorrow. Okay? Something could just fall apart. The Solana chain could go down and never restart. Bitcoin could have a double spend issue. Anything can happen. So, first of all, never borrow to speculate. Second of all, never have all your eggs in one basket. Okay? So, that's just critical, everybody. Do not do that. And that's financial advice. Park it somewhere safe like a treasury. Take the 5% and run. Next is a question from Soldier Boy and In the Right Place. In the ATR TA Masterclass video, you mentioned ATR working well on stodgy stocks, particularly in Australia. What stocks does this refer to, or which sector or industry? And I'm looking to start using the IA suite of indicators so I can spend less time at work. Good plan. The time difference makes it difficult to trade in the US market. So I assume you're in Australia. So first of all, Stodgy Stocks. AI put together a little image for me as to what it represents. And here, these are things, and sometimes I pick up words from being all over the world, and I don't know where they come from. I don't know if this was Australia or South African or British or Kiwi or I don't know where. But it's stuck in my head. So Stodgy Stocks typically are old-fashioned, unexciting, slow-growing companies associated with traditional industries such as utilities, maybe some banks, etc. They have stable earnings and consistent dividend payments. And again, you won't get exponential growth from these, but you can play the range. They're great range riders sometimes, depending on exactly what happens. So there are people that use the tools in Australia on these types of stocks. I can't tell you what these stocks are because they found their own little niche, and I encourage everybody to find their own rhythm when it comes to investing. And I don't want to give away somebody's secret, but you can just basically, the beauty of the back tests, you can pick something with good liquidity, high volume, a little bit of volatility, and find your rhythm on this. Again, that's what stodgy stocks are. And you can find your rhythm with anything. Like somebody just said with FluxB, it have been golden, and that's a tiny risky crypto. So hope that helps. And best part of the week, everybody. Thank you so much for helping. You help us help them. This is the Cocobolo Troop. We sponsored 6 Howler Monkeys, Nirvana, good band by the way, Nuri, Brava, Tama, Kurt, and Oriol. You can tell the people that mind these things love music as well. Some were injured, some had electrocution accidents, but they all need proper care and rehabilitation because they're not able to look after themselves for now. Hopefully someday they will. So thank you all, everybody. And these little animals are so cute. And tomorrow DCA is live on CTO's channel at 7:30 a.m. my time, 4:30 Central European time. See you all there. And that's early morning Sydney, Australia time, or Auckland. I don't even know what time it is in Auckland. And don't forget as well to subscribe to amplify your intelligence. Now I'm going to do some live questions if they are here. Yes, we do. And a big thank you as well to the mods in the chat that make sure every single question is listed and addressed and gets to me as well. So, Rusty Woods. Yes, Rusty Woods says thank you to moderators. Yes, thank you. They're amazing. And they keep this place toxic and free of scammers too. And there's a huge uptick, by the way, in scammers. There was a funny meme I saw last night. It's a big vending machine, and it says test your intelligence, and it says enter $100 bill here. I should have shared it today, but that's don't give money to anybody expecting to get more back or anything back. They're going to steal it, okay? And I will never reach out to anybody ever. And neither will anybody else out there. We don't have time, okay? So if somebody reaches out to you with my picture, it's not me. Guaranteed. $1 million on that, actually. So thank you, Rusty, for pointing that out. Kevin Barani. Love this channel. Literally changed my life forever. Yay, thank you. I'll never have to worry about money again at 27. Beautiful. So these are life-changing times. And yeah, the young people making it is incredible. One Brighton. So many people, TA people, say Bitcoin going down to 35K this month. Do you see any validity to this? No. As I showed you in the chart earlier, level 7 is 39,000. That is a very, very strong support level. We have 3 to 4 times the amount of Bitcoin being produced, leaving the system into ETFs. Okay? And it's not just the ETFs that are buying. Okay? You got people like Saylor, and you got individual investors. And now that people see the asset class is real, they're buying in their markets. Talking to a friend the other day, he actually is getting some money in Europe, flying to an offshore country in the Atlantic, and trading cash for Bitcoin, sticking a key, and then go. So that type of stuff happens. People are gathering Bitcoin. They know now. They know now for the first time. They've been watching it 15 years. Now for the first time they can trust it. Now a lot of the TA experts, you can't look at TA alone. You got to look at fundamentals. Why am I obsessed with money flow? Why am I obsessed with hardness? Why am I obsessed with TA? TA only determines when. Okay? All the other FA stuff determines what's going to happen. The TA is for when it's going to happen. Okay? If you are just doing TA alone, you're filling people full of hot air. Anyway, just my 2 cents. So, Adam Q. And by the way, World War III starts, price of Bitcoin will probably go up. That's what happens. Like the price of gold goes up in times of crisis. Bitcoin loves a crisis. Bitcoin also likes money printing. And a crisis drives money printing too. So there could be a 1 or 2% chance it goes to 35K. But odds are these TA experts don't have their bags filled. And they know they missed 25K. They know they missed 15K. So they'd be very happy to get on the bus at 35K. Just my thinking. Adam Q. If you could ask Elon Musk one question directly, what would it be? Brilliant question. Oh, that's a tough one. I'd ask him, are you worried about the threat of assassination by a government? It's a tough question, but I'd ask him that and ensure he builds up his security and make sure he's protected at all times, because as far as I'm concerned, he's the most important human on Earth, period. So, Adam Q, you put me on the spot. I answered honestly, but it took me a second. Sorry for that pause. Doc Intern, input data verification solutions for AI and off-chain Web3 compute could be truly disruptive, like ZK EVMs and TrueBit Verify. Had a chance to look into these investments. I did, and I wasn't impressed when I looked at some of the data there. I'm going to take another look though, Doc Intern. Ping me in Patreon, and I'll take another look. I remember, so I get hit up with like hundreds of requests every day to check stuff out. I do a very cursory look at some of our models and data, and something put me off about that one. And also, you got to remember as well, there's a lot of, like when you think about data verification solutions and AI and the whole narrative, a lot of companies that were around for a long time are pivoting to this narrative, but they don't necessarily have something special. I promise I'll take another look and make a post on it too as well within Patreon. Bhavesh Patel, I had a question regarding Jupe. How hard do you plan to go in versus your other Sol alt allocations? Where do you see the low? And we're seeing the bleed past airdrop. So right now, I think Jupiter is about 4% or less, or 3%, maybe even 2% of my Sol alts. It's a very small position. Like FluxB is my biggest or second biggest position. And I'm waiting for a price point before I enter. And I will layer in. But I got a small position. So what I did was I got my airdrops from my wallet activity. So I got a couple of those. And then I bought a little bit pre-market to match some of my airdrops. So if I get, say, 4,000 from one airdrop, I buy 4,000. So the airdrop is free, and I buy 4,062 cents. So my average price is 31 cents. That's my reckoning. I think it's a screaming deal. But as it falls down, I will buy more. But right now, what I do is imagine a continuum of prices, and then I have a continuum above that of the upside market cap. And I go heaviest on the ones that I believe have the least amount of risk and the most upside. And right now, at the current price of Jupiter, like let's say 60 cents, it doesn't have as much upside as some of the other names as well. It's already big. It's like, how much upside will ETH have? It's already big. I know these things are a lot smaller than ETH, but that's the way I think. And there are things that are a lot smaller than Jupiter. And that's how I load in. And that's why certain things blow up fast, like FluxBeam. So from that perspective, I use the models. I use the layer. Layer doesn't work, though, right now because there's not enough data. It needs data to crunch. So I'll just try to pick my spots and see where the volume is. And we'll see. But I do plan on buying more, and the deeper it falls, the more I buy. But I have not bought since the very first day. I got a little piece. But again, it's a tiny position. Like, I've got way more pith than I have Jupiter. But I'm extremely bullish on Jupiter. But the pith upside is far higher than Jupiter. So that's the way I invest. Relative value. Ruffle. My precious CleanSpark. Will we ever see 13 again? Good question. Miners are getting whacked and smashed. Hash rate going through the moon, which is a problem. We will, definitely. In fact, if you talked to me back in October 2023, my bull market target for CleanSpark was $12. Maybe September, October. It's $12 was my bull market target. And then it hit $13. So it blew through that already. But then it fell back down to earth. We just need things to settle. A lot of change happening now that the ETFs are there. There's less reason for proxies, but there will always be a reason for proxies, I believe. And it was nice to see the relative strength of MicroStrategy as well last week in the market. So yeah, remember, these things print money. And remember as well, half will go out of business unless, or at least they're going to have to issue shares or borrow a lot of money to stay alive, unless the Bitcoin price goes to 70K. That remains my thesis for quite some time now. And we're already seeing signs of that. We're seeing big miners actually their hash is dropping, which means they're turning off their rigs, which means they can't mine effectively and efficiently with their cost of electricity with the current hash rate, which is 450 exahash or something like that. Anyway, so that's where I see it. Yeah, they'll come back. And the ones that actually start making big profits when the price of Bitcoin goes high after the halving, they will go to the moon real fast. And we could see crazy blow off tops happening for miners. So we'll see. Excuse me. Thanks for your super stickers, all. Andy, Jeff Hammer, Hudson the Dog, Forrest M, Signal 103, Piper, and Daryl Anderson, and Dog One. We've got Dog One and Hudson the Dog. Thank you all for coming. I hope that is it. Sometimes it's the last minute thing I missed. But if not, everybody, thank you so much for coming. Long show. And I'll see you all. Have a nice Sunday. If you're on the west coast of the United States, watch for the weather and stay home. And Jay Fain and Lance Jedesberger, thank you so much for coming, everybody. I knew there was two more. And thank you to Mods in chat. See you all tomorrow morning on DCA. Bye-bye.